Good Thursday morning, Market Chameleons. Everyone join us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the share disclaimer. Be aware that neither Dimitri, myself, Market Chameleon are registered investment advisors or broker dealers. If you're searching for investment advice, please reach out to a licensed professional. As always, this show is for informational purposes only concerning Market Chameleon tools and products. With that, D, ready to roll?
Yep. Good morning, everyone. And I'm going to share my screen here. And I am doing it from I'm at a different location today, so hopefully my internet and everything stays up. So if you're joining us for the first time, quick note, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into the live chat on YouTube. Will's keeping an eye on it. He'll let me know, read it back to me. And to give you a couple minutes to put those questions in, we're going to start out taking a look at our pre-market report to see what type of insights we could get from the pre-market trading, and then we will move on to our questions. So let's start out here, pre-market report. Up top, you will see this calendar view with summary statistics of the activity in the pre-market hours for those particular dates. And the idea behind that is you could compare today's activity to the most recent history and eyeball something that may be unusual or a trend. Let's review today's activity, which is August 29th. Over here, we see we have 562 stocks trading higher in a pre-market, 235 stocks trading lower. We have 133 million shares trading on up volume, 159 million shares trading on down volume, and we have $3.7 billion worth of stock trading higher, $4.2 billion worth of stock trading lower. And from that perspective, it's a little bit of a mixed bag. We do have more stocks trading higher. The dollar value of the stocks trading lower exceeds the dollar value of the stocks trading higher. So let's look at it from a couple more perspectives. Then we'll move on to our questions. So I'm going to slide down the page. And now we get to see this more granular view of the pre-market trading. We see stock symbols, price changes, volume. We also have our most active stocks, our biggest percentage gainers, our biggest percentage decliners. I'm coming down here and I see 109 stocks made it onto our biggest percentage gainers list, 49 on our biggest decliners. And from that perspective, it looks like the trading in a pre-market hours has a bullish bias or bullish lean. Now, to make it onto this list, we set thresholds because stocks in the pre-market can trade with very low volume, low liquidity. And if it meets our thresholds, it could make it onto this list. And that will include small cap stocks, it will include ETFs, closed-end funds. It could be a preferred stock, a leveraged ETF, or even an inverse ETF that moves in the opposite direction of its underlying that it's tracking. So to narrow down this list to a small group of stocks, we could use the filters above. If you notice this one filter in my watch list, this allows you to filter this report by stocks that you saved in your own unique watch list, the group of stocks that you like to track. You can do that on this report or on other reports on the website that has this filter. We're going to use this in ETF filter in our example, but it'll be a similar concept. I'll show you how that works. If you click on that filter, you'll notice that you get a drop-down menu with different ETFs to choose from. We're going to go and select this first one, SPY. And when you do that, you see that the list below got filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. So if you created a watch list of S&P 500 companies, it would be the similar idea here. And now you could see we narrowed down the group of stocks we're analyzing to the S&P 500 companies. And here we noticed that 9 stocks made it onto our biggest percentage gainers list, 7 on our decliners. Again, it's a mixed bag here, maybe a slightly bullish bias if we just look at it from this perspective. And we gave it a couple minutes. If you have questions, I'll take them now.
Yeah, we did. I'm trying to get it. Rob saying the NVIDIA straddle had movement after the bell, the downside, but in line with discussion history, history had discussed, we will see. It wasn't a question. It was just making comments about NVIDIA's move after the bell.
Okay.
But nothing's popped up yet.
Okay. Yeah, so we can take a look at NVIDIA. Let's take a.
Actually, before you do that, can I share my screen?
Sure. So I'm going to come down to NVIDIA. Let's go towards.
I'm going to share the disclaimer one more time. You see that?
Yep.
All right. You can take it over now.
Yep.
We're going to look at NVIDIA after the earnings, I guess.
Okay, so let's come back to these interactive charts. We've been discussing them all week. And let me close this menu here to expand the screen. And what we did was look at NVIDIA stock behavior, options behavior around earnings from a historical perspective. And the idea there was just, we don't know, obviously, what NVIDIA is going to do in the future. You know, NVIDIA did report earnings yesterday after the market closed. So right now, the indication in the pre-market that it's down 3.2% in reaction with that news. And what we did was look prior to this announcement, how NVIDIA tended to move around earnings, right? And how did the options behave? And price tended to price earnings. How did the stock tend to move after earnings? We looked at it from different perspectives, from the movement from close to close, from the previous day's close to the open, from the open to the close. Then we looked at extreme moves from yesterday's close to the high of the day, yesterday, or the previous day's close to the high of the day to the low of the day. So we looked at all these. Right now, we're kind of right here on the opening gap. So our indication here, if NVIDIA opens where it's trading right now in the pre-market, that would be down 3.2%. Okay, that's so far what we're looking at. And I'm just going to come here and click on these opening gaps. And here is a history of how it tended to move historically from the previous days to the opening gaps. And we talked about these are the magnitude of the moves. So on average, it moved plus or minus 6% in either direction. But we also discussed, besides the average, how is that those observations, distributed around those averages, because the average is a number, you could come to 6%, right? If all the numbers are 6%, they'll average out 6%. Or you could have very wide numbers, you could have zeros and 12%. So that's the question, where, how did it tend to move, even though we get this 6%? We saw that it is a very wide range. We had a large, from these historical perspectives, moved as much as 26% at the open. We also had unchanged, right? Like where the stock barely moved at all or didn't move at all from the previous day's close to the open after the earnings. And if we looked at all the observations and said, well, give me the number where half the moves were above, half the moves were below, that was 4.5%. And that's something that we discussed where we're talking about where the the moves, even though we have this average 6%, the dispersion, the variability around that average is very wide, right? That it could be, a lot of potentials there. And you could see even the median move is below that average, meaning that the average is getting skewed higher because of some potentially outlier moves, right? Like this one here or this one there. And we could just see here, this line here, this is the dotted line. That's the average. That's the 6%. That's over here. That's the dotted line. And all these bars, those are the historical opening gap moves. The green bar means that the move was to the upside. The red bar means the move was to the downside. But they're all pointing up to show you, to be able to compare the magnitude of the moves. And if it was always close to 6%, we would see a lot of these bars very close to that dotted line. But that's not what we see. We see, bars that go way above it, and then bars that go way below it, right? So you could see how choppy that is. And that shows you that there's historically, right? Historically, it had wide ranges, and it's been, either very low or very high. So there's a lot of risk there, in trying to map out or model the potential moves. We do see that also that historically it tended to move up more often than down. So today that's, it is down, but you can see that more often it was up than down. So that's, one thing that we're looking today. And it did historically was skewed towards more positive than negative, but today it is negative. So that's the opening gap we looked at before. You could see that today's is kind of just falls really within that kind of range of the average median on the lower end. All right. One thing maybe we could look at is since NVIDIA did report earnings, that they're out. Let's see what NVIDIA tended to do after earnings. So like the news is out. Let's take a look at another report that could give us some more insights. How NVIDIA tended to move after reporting earnings. So actually, let's look at the earnings moves over here. So these earnings moves, let's come down here. These are looking at the last 12 quarters. Last 12 quarters, you could see the opening gap. Now, keep in mind, the report we looked at before was looking at a longer history than 12 quarters. It was looking back 10 years. This looks at the more recent history of only the last 3 years. And looking at this, we see that at the opening gap, 55% of the time it was higher, 45% lower. So it's almost 50-50 there. If we look at the absolute average move, if we took all these and looked at the magnitude, it was plus or minus 7.9%. But the range was between 26 and 0. So you could see that very, very wide range, right? you could observe here, right? And another observation, I'm just going to come down here, is that the magnitude of the up moves seem to exceed the magnitude of down moves, at least from the very extreme. So you could see, like, on the upside, we had like a 26% move to the upside, while to the downside, we saw a 5.6% move to the downside. So, and I think that that was also confirmed with the longer term average statistics going back 10 years, where the upside tended to be more violent in magnitude of the move than the moves to the downside. So what about after the open? So now let's say wherever it opens, our indication is, like, say over here. We don't know if that's going to change between now and the open. What did it tend to do after the open? So here we look at, we start out at the open, and then we measure to different